Good morning and welcome to another What's Up with the Market session. We're going to look at a market status update like we normally do. We'll look at indices and a few commodities, a couple of things, and then I'll flip back into it. So I'll start off with a presentation, flip over to Beyond Charts, come back to a presentation, and we'll just talk about crypto preparations. Right, let's get into it. Before we do that, I want to remind you that everything we cover here today, and when I cover this generic technical analysis, is not used in SPA3 Investor or SPA3 Trader or in SPA3 Crypto as well, for that matter. We should add that to there. And none of this generic technical analysis is used to make any decisions in the public portfolios, and nor do I use any of it to make any decisions in my own portfolios that I trade. Everything is 100% mechanical and has been for many, many years. And I precisely follow our systems as you all do, hopefully, 100%. Before we get into the technical analysis, everything we cover here today is generic or general personal advice. There's no direct or personal investment advice here. It's all general advice. Okay, so I'm going to do the market status update. So I'm going to switch into Beyond Charts now. Then we'll come back and talk a little bit about crypto and some of the preparations that need to be going on before we release the product. Some homework you can do if you like. Starting off with the Dow, first thing that comes to mind when I see the first observation is that the Dow is underperforming the S&P 500, which is a good thing because that's typically risk on. So broader market doing better than the 30 Dow Jones constituents in an uptrend, made a new all-time high since the last time we had a chat about the market status update. You can see it met resistance here, that resistance that was all the way back here to November 2024, resistance, breakout. So what this does is, there's a lot of talk at the moment about indices being overbought, about euphoria around the place, both here in the United States, about the tech stocks, high PEs. Is this all new news? When first time you've heard it? My view, having been playing in this game for many decades now, is this is not euphoria. If people think this is euphoria, they ain't seen nothing yet, or they've forgotten about what the euphoria, the real euphoria that we had in the United States and even Australia leading up to 2000 when we had the tech wreck. That euphoria, those 5 years, it was a long-term euphoria as well. It wasn't just a few days or a few weeks or a few months. It went for 5 years with probably a little bit of a break in 1998. That was euphoria, and we're not feeling anything like that now. So either these are young commentators or they are old commentators and have early onset. I don't know, but this is not euphoria. And hence, but what it does do, though, is it adds to the wall of worry. People go looking for reasons to fear, to add risk to the situation. And it's in these times that we have to hold strong and go to the charts. So this is telling me that the Dow Jones having this breakout, getting through this resistance, and we'll have a look at the other charts in a moment, who've already broken through that resistance, and which are leading to this euphoria commentary. My view, non-euphoria, not yet anyway. But this is adding to it. So this is another confirmation, if you like, getting through this resistance on the Dow Jones, which is battled to get through. And this underperformance of the S&P 500 is a good thing, because that's what we see in broader market being involved in this, the S&P 500, and it outperforming the Dow Jones. So this is a risk-on environment. So there's the first sign of risk-on. Let's go down to the S&P 500. I thought I pushed the button. Yep. And so S&P 500 broke out. Can see there was hardly any resistance. Yeah, I'd hardly say that was resistance. It didn't quite get to there. It was basically just a peak on the way up to resistance. And first attempt, it got through the resistance. And so it's still in this channel, this longer term channel that we've got here. I'll just zoom out. Oops, maybe that was the longer way to do it. I think I've got all data selected. Let me go and make it 25 years. That'll be a little bit quicker. So it's this uptrend that's been in place since the last quarter 4Q of 2022. So this is a 3-year trend that's been developing here after we had this really messy bear market, primary bear market in 2022, best part of 2022. So this is strong. This is strong price action, V bottom, straight up to resistance and straight through a new all-time high last night. And volatility is low. It's right down here at 0.769. That is low volatility. It's even fallen out the bottom of my, if you like, range of what defines low and high. So that's a sign of a maturing trend. Euphoria would be a little bit more volatile than that. New high, new low, nothing, no divergence here, so no warning signs there, no divergence on the cumulative advanced decline line. We're seeing more stocks advancing than declining while the index rises. That's a good thing. Here's a little bit of divergence, or did occur on the S&P 500 constituents that were above their 150-day moving average, healthy 66% above, but there was some negative divergence here with the index rose, and we saw a bit of a fall in the number of stocks and the fall and the peaks joining the peaks together. But that's now been overcome, if you like. It's been overridden by the fact that we've made a new high over here. So that divergence has gone away, no longer applicable. We've got the US dollar falling while stocks rise. That's a good thing. Here I've got the CIROC smoothing out the relative strength line between the index and the US dollar, the basket index, and that's going in the right. So that's risk on. So you're going to see a lot of this where the last line was a green line, and we've had this risk on environment. So there's a lot of positivity about this environment. So there, risk on happened back here in May of 2025, where we've got the Russell growth outperforming the Russell value. You can see the relative strength line rising over here, that moving average, the green moving average rising, and the smooth CIROC of the relative strength also in risk on. We've got the same with the consumer discretionary index sector index compared to staples, consumer staples rising. There we are, the relative strength rising. This is all risk on environment. We've got the put call ratio on equities falling as well. Look, there's the green line, which is denoting risk on. Which means we've got falling puts to call ratio, which means people are more bullish because they are going to calls rather than puts. We've got declining 10-year treasury note rates, yields falling, and that relative strength line there falling relative to the index. So also risk on, and so it goes on. We've also got a rising 20-year treasury bond. So you've got bonds and equities going in the same direction. That's bullish, because if bonds are rising, bond prices are rising, means yields are falling. That's bullish. We've got the VIX index falling and right down at pretty low levels and falling lower, lower lows, lower highs. And in this, you can see the volatility down here. The volatility at 9, which is right down low levels here as well. You can see the bands I've got on there. And so it goes on, and then we come to the Nasdaq. How's the Nasdaq doing relative to the S&P 500? So it's outperforming the S&P 500. That's a good thing. The slightly higher volatile, more risky part of the market, the Nasdaq composite being the whole market, all 2,000 plus odd stocks that are listed on the Nasdaq are all in this composite index. This is rising, not quite a new all-time high as the S&P 500 did, but there's the relative strength line, CIROC, smooth of the relative strength line, rising. And don't get put off by the fact that the CIROCs are up at their highest levels, or even at their lowest in the case of the put-call ratio. The CIROC can stay up at those levels for weeks and months at a time, and the smoothness of it will keep it up there. And when the divergence or the falls happen, it'll then turn over. And we've got fairly long-term settings on here. I think we've got 34.21 in most of them, so I haven't gone short-term reactionary on the look-back periods on the CIROC. So the Nasdaq 100 also outperforming the S&P 500 rising. So same thing. And we also don't have any divergence, so no early warning signs on the cumulative new high breadth of market indicator. We did have some divergence here on the cumulative advanced decline line on the Nasdaq 100, and that's still in play. So there's one early warning sign, but remember, not every divergence is followed by a falling market. A negative divergence like this is followed by a falling market. But what you'll find is just about every falling market is preceded by a divergence. So it doesn't mean it's going to happen. Here we have divergence on the Nasdaq 100 on the number of stocks above the 150-day moving average. So here we do have divergence on the Nasdaq 100. So there's a little bit of a sign there, but remember, not every divergence leads to a fall in the market. What have we got with the SOX? Now here's an interesting one, because the SOX is a sector, is the semiconductor sector. So it's a subsector, if you like, of the Nasdaq 100 or Nasdaq Composite. And here it's been, and I've got this measured against the Nasdaq 100, right? So we've had a period here where it is rising and outperforming the Nasdaq 100, which is good. That's really a bullish sign. And you can see that we actually got an entry of there, if you like, or an early warning round about, I would go back at the earliest round about May, excuse me, of 2025. But we now see the SOX is matching the NDX. So going sideways and not yet, not yet weaker than it. But throughout this entire time, while the SOX has been outperforming the Nasdaq 100, we've had commentators saying that the tech stocks are doing poorly, that they're starting to come off, that they and it's almost like they're commentating on something that they see happening in the future rather than what's happening right now. And I hear this commentary and I go look at the charts and I go, what charts are they looking at? Or are they just in a sound bubble, just reverberating what they're hearing somebody else say alongside them? I don't know. But they certainly are not being objective about it. But there may be a little bit now, because if you've heard that in the last week or two, then there's no weakness yet. But weakness means falling. That hasn't happened. And maybe what they mean, but without knowing how to explain it, is that it hasn't been, as rip-roaring strong as some of the times in the past where, you've had NVIDIA and some of these large cap stocks just shooting the lights out. Certainly that isn't happening, but there's no weakness yet. So keep an eye on that. So the two bit of weaknesses we've noticed here is this one in the SOX. So keep an eye on the SOX, the relative strength of the SOX to the NDX, and also just that breadth of market indicator of the number of stocks above the 150-day moving average in the Nasdaq 100. And so you'll be able to get this analysis. You can download it. It'll be updated within a few minutes of finishing this session. Right, moving right along to what have we got here? Okay, just an interesting point. This is the Canadian market in a long term. I'll just go to all data again because data is pretty long. So that's long-term data, 1977 of the Canadian market, and it continues to stay in these long-term bounds. And why do I look at it? Because it is actually and so we haven't got complete data. So let's go back to 1992. So that blue line is the All Ordinaries Index. So you can see the similarities between the Canadian market and the Australian market. And I've based that base reference, that base 100, at March 2009. So at the very base of the GFC, that trough. So I've picked the exact trough there. And you can see the similarity. Sometimes we outperform, sometimes we underperform, but there the Australian market underperformed leading up to the tech wreck, so 2000. So we didn't have as much euphoria here in Australia as the United States and in Canada. But pretty much the same there, got a little bit of outperformance. But what's happened of recent times, and you can see, even though this is based at 2009, we were just before COVID and to the bottom of COVID, we were almost line ball, bang on bang. But look what's happened since then is how we've underperformed. We know we've underperformed the US market, but the Canadian market is a much more similar, resources, minerals type market to Australia. And we have underperformed it. We had the sideways movement, sure, leading into the sideways movement, which went for 3.5 years. They also did. The US didn't, but we had underperformed leading into August of 2021. And so they had a better run into it. kind of matched each other going along there. And since then, they've broken away. They're doing far better than Australia. So Australia has lagged. If you felt that, it certainly is the case. So that's just a little bit more evidence of a similar market as Australia not doing as well. And we won't go into reasons or look for reasons. That is just a fact that it isn't. Okay, but we have broken out to a new all-time high, which occurred here in July. And this has been a pretty stellar performance, even though it's felt good compared to the S&P 500. We are not outperforming it. We are basically holding water with the S&P 500 at this stage. So, and if you go and look at the sectors, which we won't do today, we will do that another time. It really is industrials that have and some of the bank finance sector that has really stood out. Resources a little bit, but we've had pockets of market in Australia, and of course we don't have that heavy tech index like everybody else does. Okay, I'll get to questions in a moment. Right, that's all ordinaries, and we'll quickly get through the others. All ordinaries, and what are we looking at here? The Australian dollar still continues to battle. It's been a long-term downtrend, which peaked back here in February of 2021, and has just been this long, forward a bit year, just falling away. And Aussie dollar, share price of Australia. Right, where are we going to? Nikkei. Whoops, sorry, a bit quick. The Nikkei has broken out and remains above. Oh, I know why I've got. I'll just go back to 25-year. Go a little bit quicker. Right, Nikkei is above its all-time high. It struggled along here, and now looks like it's made a clean break above this all-time high from back in 1989. So it's on a pretty steep uptrend. Let's keep an eye on that and see where it goes to, because there are some correlations between the Japanese market and the Australian market. DAX is struggling to make new all-time highs. It probably should be moving this up to here and with a dotted line, and just look for that breakout to occur over there. But is marking time underperforming after underperforming the S&P 500. The FTSE is probably having one of the best. I'd go back to here since January of 2024. This has been one of its stronger periods. It's relative to itself, that is, but it's still underperforming the S&P 500. Look at this, a little bit of outperformance over here, but it's still underperforming the US markets, and has been for many, many, many years. The Bovespa has just broken out. That's not quite an new all-time high, but as near as damn it to it. But that's and what is that an indication of? It's underperforming. They're underperforming the S&P 500, but that could be leading to a new all-time high indication. Developed markets, maybe joining this bull run. Not euphoric yet, but in a euphoric market, you would see the developed markets coming along. China's had the China large cap stocks has hit some resistance. The Shanghai All Share Index has broken out, but it still hasn't broken out. If it breaks out above that top line and shoots above, that will be very, very strong. So being in this long-term, very volatile downward trend, and you can see the underperformance of the S&P 500 here. So as strong as that looks, it's only really just matching the S&P 500 from this period over here, from that spike up. So it looks good on its own, but relatively is much the same as anywhere else. The Hang Seng has enjoyed a good run from January 2024. That's been pretty strong. I could put a trend line on there. I should do that. Good to see the up and lower there. Looks pretty symmetrical, and is an open trade on if you were trading the index with SPA3 Investor, and it's just struggling to get above this resistance here. But a long way. Look where it is. It's basically done nothing since 2008. That for reasons we won't go into now. Okay, the South African market, the ZDAO, which is an index on the US. What I've also done here is I've put a relative strength chart against the All Ords, and I've based that back all the way here to December 1998. So top chart is the ZDAO, and the bottom chart is the Australian All Ordinaries, just unit for unit, no exchange rates in there, although that could play a role. But it just shows another resource market, how other markets are, do well, and it's I guess just a testament to the fact that we should be looking at ways of exposing our capital to other markets, outside of Australia, not just inside Australia, and that's certainly crypto can play a role in that, and our income system, which we'll be talking a bit more about in probably about 6 to 8 weeks time. Okay, CRB index marking time going sideways. A lot of that is being held back by oil. Gold has fallen out the bottom of this channel that it had kind of formed over here. That's more strongly joining the lows, the troughs, to form that. You could actually redraw. You can see that the gradient was pretty similar to this previous channel over here, but you could even put that there, or put a dotted line there to try and define that channel better. But it's fallen out the bottom and going sideways. There's a symmetrical triangle forming over here. Sorry, not a symmetrical triangle, an ascending triangle forming, which is a bullish signal. And gold's been trying to break out above this level here, which is around about, about 3,400 odd, and has struggled to get through. But we know gold can do that, and the number of attempts to break through resistance in gold tends to be a bit more than normal. Stocks, it's normally 3 or 4 or 5 times. When it breaks through, it's pretty strong, but gold can do it many more times than that. So it's trying again, just snuck its head out above. I've got that drawn at the close of this bar, so I tend to put my resistance at the close of a bar that's, I feel, is representative of where that could be, and that's a subjective thing. And so I didn't raise it up to that close there. Why? Because we fell back into the range. So I kept the previous one rather than go to the latest one. And also these other closes here are closer to this one than to that one. And it just makes the breakout stand out a bit more when and if it does happen. But, if you feel that's a bit too lenient, you could raise it up to that close there. And that's still a valid resistance line. Technical analysis, you can make it what you want. It's pretty subjective. Okay, on to silver. Silver is starting to slightly outperform gold, but it's had these short sessions, so this is not convincing yet. Need a bit more time. You can see most of the time it's underperformed gold. Copper had a massive fall out of bed back there, and is just finding a base again. This is too short a period of time to say that it's found that base, but it's trying. And oil has been in this longer-term downtrend now, which started back in April of 2024, so some 16 odd months, and it doesn't look like it's breaking out of it anytime soon. And here we have Bitcoin. We'll look at Bitcoin in a little bit more. These are the Bitcoin signals on them. So this is SPA3 Crypto signals. There you can see it's just given an exit signal. And as has Ethereum hasn't given an exit signal yet. It's got an entry signal back here in April of 2025. So that's a good 4 months trade going. And the trends in Ethereum have been far more definitive. Look at that. You could almost pick them with the naked eye if you didn't have anything on them, but we'll put them on. And we'll have a look at that in a moment. Quickly finish with palladium and platinum. I think we should be keeping an eye on these because this breakout here was significant. And I've got the orange chart here is the Australian ETF, platinum ETF, and the black one is the US-based ETF. So the one's in Australian dollars, which ultimately goes back into US dollars. But this breakout here was pretty strong. And so I think we should be keeping an eye on both palladium and platinum. This retracement that it's having is pretty normal. It's kind of retraced back to resistance, and it's hopefully finding support here for the positive case. If you're looking to short it, well then, look for this breakout, this not becoming a strong support base. But the longer this goes on without falling, so when buyers come in, when sellers are looking like they might, peter out, that's the case for that becoming a stronger support base. So to look for platinum to have another run up from these levels, that's a pretty shallow retracement as well. And palladium, goes along with platinum. They're pretty. Sometimes they follow each other, and there's also a case for platinum, to in the long term. There's been this talk about, discussion, commentary about, palladium catching up to gold, and I've been through that before. The platinum gold ratio. We won't go through it today, but you'll be able to have a look at that in the charts when you download them. So Palladium's had a bit of a steeper retracement, that coming back down to support. And if you really wanted a shorter term trade this, or not shorter term trade it, longer term trade, but shorter term analysis, you could start playing around with these support levels and resistance levels, which I've kept at quite a big picture level. But this is a clear breakout, and now coming down to resistance, and so that's an opportunity. Okay, we'll now flip back to so that's everything to do with the. I'll have a look and see if there are any questions here. That's to do with the market status update. Morning. Okay. I'm curious to find out what broker most of you use for crypto. We'll talk about this in a moment. Tim saying SwiftTX and Binance. Rolf is saying, I found trading breakouts from ATL stops is not good in sideways markets as you need more confirmation. Crypto is going sideways at the moment. Do you think trailing stop have some sort of filter for sideways markets? Okay, we'll talk a little bit about analysis, but probably today is not the day, Ralph. But you're never going to. You've heard and you've seen, and you may, if you've got I'll just make a generic mechanical system comment here. Is that no trading system is perfect, and you will find in technical analysis anything that you want to try and confirm from commentary or whatever discussion. If that notion holds sway in your head, you'll be able to go to technical analysis and you'll be able to confirm that 100%. But you'll also be able to use technical analysis to not confirm that, to say, no, that's rubbish because this can happen. You'll go and find other examples that will show that what your notion is incorrect. And that's the point, is that you can make it do anything you want to do in the moment that you have whatever you have in your head. And the challenge with markets is to learn to think in probabilities and know that no edge is going to be perfect in every market. So some sideways markets, I was having a chat with somebody the other day who says, he only trades 52-week breakouts. Well, SPA3 Investor is 100% proof of the number of times we've had some of our biggest trades, not from the 52-week breakout, but from the middle of a sideways moving market. And the cost for that is that you have to, some of the signals you take in the middle of sideways moving market, if you like, end up being small profit, small loss, or maybe even a 7, 8, 9, 10% loss. But the one that breaks out over a large sample, getting in the middle for those ones that do, you're going to make more profit than waiting for the 52-week breakout every time. So 52-week breakouts have a high hit rate. They do, but they miss out on a lot of profit before they get there. And so what is, in my view, people that only trade 52-week breakouts, are letting their egos sway their thinking. The people who want to try and avoid small loss trades during sideways moving markets are letting their ego hold sway of wanting to be perfect, wanting to be right, not to avoid losses. And you cannot play this game. You cannot be successful in this game if all you're trying to do is avoid losses and avoid being wrong, because there are just plenty of them. Trying to avoid sideways markets. You just have to play the game during those markets and be patient for when the conditions come that you just multiply your money. So sure, we could debate till the cows come home, all the technical analysis, pros and cons of what indicators to use in sideways markets, to try and flip between reversion to the mean and trend following, to try and look for exhaustion, all that. But at the end of the day, you can make an edge out of all of those techniques. But whatever edge you make, you're going to have losses. End of story. And what you have to do, this game is not so much about, trying to maximize the winners or minimize the losses. It's about how you handle the losses. That's what this entire game is about. The people who are best at losing will be the ones that win the most. That's effectively what it comes down to. Okay. Sorry, ran over. Sermon for the day over. Could you recap on how gold versus silver price is playing out? Thanks. Okay, well, let's do that quickly, and then we will go to... So what I have here, so that's gold. Let's go down to silver. Silver, we've got, what have we got here? Gold-silver ratio since 1978. So effectively what I've done here is the bottom, the red and green is silver, the blue is the gold price, going back to 78. So you can see there was correlation here, pretty close. Shape, almost the same. and then silver falls away dramatically. So this is during a secular equities bear market, an equity secular bear market. And what you tend to find, bull market, a secular bull market in equities. The secular bear market in equities starts about here, right bang on there. What happens to gold and silver in a equities bear market, a secular bear market, so a long-term bear market, is they get bullish, right? And then we've got over here from about 2013, which is about here, we've got a where is it about? There is when we had the breakout on the S&P 500, April 2000. Look at that. April 2013 is where we had the breakout, March, and then look at this fall over here. As equities broke out to break out of the secular bear into the secular bull, gold just did this sideways. What is strange is that the secular bear market, bull market has continued, and we've seen gold break out. Here's where the breakout occurred in January of 2024, around about there. And we've had this strong rise in gold when we're still in a secular bull market in equities. And so coming back to the catch up here is a subjective ratio line, if you like. I've put on the relative strength. This is the relative strength line between gold and silver, and you can see silver outperformed there. Underperformed there, outperformed a little bit there towards the end of the equity secular bear market, and has underperformed since. So the theory is that this blue line, the relative strength line, will rise to the red line, and if it does, it'll make up a big chunk of that. At this stage, it's not outperforming; it's kind of even underperforming. If you zoom in, on this level over here, just its relative strength, silver's been underperforming from March of 2021. And although there's been pockets of rising, you'd put a trend line on here that would show that this is mostly down. So if the theory plays out, then sure, you'll see this relative strength line start, rather than having a long-term fall, to have a long-term rise, outperformance start catching up. And obviously you can do this analysis. So I've actually just got a base there rather than 1978. I've put it on 2001. And there's one on 2012 even. So the relative strength starts 2012 round about there. So you can play around with this and see where gold and silver are, and you can do the same with platinum as well. But if the theory plays out, this blue line will rise to the red line. It's not doing it at the moment. It's really only just rising in unison with gold. Hopefully that answers it, Steve. Okay, we will go back to the PowerPoint and talk a bit about crypto. Right, I'm going to probably raise more things today, more questions today, what they're going to be answers, but it's preparation. So first thing is, we're not going to make Monday to Wednesday because we don't want to release on Thursdays or Fridays leading into a weekend. So we're going to let it slip another week, but there's plenty for you to do in the meanwhile. Those of you that are ready for crypto, we're just busy doing final testing, and we don't want to release something that's going to mean that we've got lots of support to do. So we're going to take that extra week to get the app and the BC and Beyond charts out. So what we'll also do, I won't give the exact dates now, but probably the week after. So the week of the 15th of September, we'll start running some training sessions and just ready and we'll record those obviously, and just to get people that are brand new to the area to learn a bit about this whole space. But also we'll also run training sessions for those of you who've been in the crypto space for a while, as to some of the nuances and differences of how SPA3 Crypto will fit into what you already know and what you already do. There will be a SPA3 Crypto, and really what I'm doing here is I'm answering a lot of the questions that have come through to people and emails and whatever. Is there will be a SPA3 Crypto public portfolio, and ready to go with brokers and everything there, and money set aside. The only thing is I'm not going to start it before we release the crypto. So we'll start that within a few days of probably not the exact day, not Wednesday the 8th. We'll probably wait a week or so, and when the training starts happening, so to give people a chance to get their situation sorted, so you can start. Some of you, most of you, can start at roughly the same time as the public portfolio, and we can go through this whole learning together, not just in theory and signals, but also real life transparent trading with it as well. So, in fact, I'll just actually show, leading into the release, let's just go back to Beyond Charts and have a look here at the actual, and these are the signals that we've got on there at the moment. These are SPA3 Crypto signals, not investor signals. So I'll just turn on SPA3 Investor and you'll see. So we've got crypto on, crypto off, the signals come and go. So I just want to show most of these are actually closed trades at the moment. So Bitcoin is closed trade. Coin, the Coinbase, the crypto exchange, they're also closed trade at the moment. We've got CRIP here in Australia, the ETF closed trade. ETHE, which is the Ethereum ETF traded in the States, is just an open trade. Ethereum is an open trade. We've got GBTC, Bitcoin ETF closed trade, Litecoin closed trade, Master MSTR, MicroStrategy closed trade, and so is Ripple. So there's only two that are open at this stage, which is good leading into, we didn't want to have them all shooting the stars out and have to wait, for maybe weeks before we got exit signals to be able to start trading. So it's kind of set up, good that it's that way, and we want to get it out. So, you guys we can all start trading it together in a public portfolio. So, so that is, there will be a public portfolio. Some preparation to do, and here's where a lot of discussion is taking place at the moment with customers who are setting up their environments. Is broker and crypto exchange to use. Right, so there are nuances here in how you set this up here in Australia. I've looked at the environment, and I've had an account and had held Bitcoin and Ethereum for some time with independent exchange. So I'm going to use independent exchange to trade coins, but there are others out there like Coinbase and et cetera, et cetera. Now we are all familiar with the broking environment and how to get money into our broking environments. But there are nuances with crypto exchanges. And and this is what also confuses it, is that some brokers do allow, like Saxo, do allow coins to be traded. And CMC also allows it. I'm told that Interactive Brokers don't. If you have an Australian-based account, you can't trade crypto coins or tokens that they have on the exchange. Now, I raise that as a flag because a lot of our customers do use Interactive Brokers to trade with. There are also other nuances with Australian-based crypto exchanges, not brokers, exchanges, with the currency that you can trade in. And I have been able to confirm that Coinbase, although I've never used them, and Independent Reserve, if you deposit Australian dollars, you can only always ever trade in Australian dollars. But they do a conversion to US dollars because Bitcoin doesn't trade in Australian dollars, it trades in US dollars. So they do an exchange into US dollars when you do that, when you buy and sell. Now, I don't know what the exchange rate is that they apply between the Australian dollar and the US dollar when they do the Bitcoin trades. But we can work that out. We can reverse engineer it. And here's where it gets a little bit more complex, is that in Beyond Charts, we only have US dollar data feeds. And we are only going to have US dollar data feeds as the universe grows. So if you're trading in Australian dollars, you're going to have to do a conversion because the Bitcoin or the Ethereum or the coin that you get, correct to 8 decimal places, is going to be what you have to put into the portfolio manager. And then the rest is going to be the cost, the fee to trade, and there's going to be an exchange rate variation that to get it to reconcile with your Australian dollar. So there are nuances here that we at this stage, it's pointless us just doing a Bitcoin to AUD. You could create that in Beyond Charts, but it's not a real thing. You'll see BTC, AUD, line charting around, and you'll see historical data for it. But all those people are doing is just multiplying it by the spot price of the AUD USD. That's all they're doing. And then working that out. So it's a synthetic chart. It's not a real chart. It's not one you trade. They make it up, if you like. So whether you do that on the chart or whether you do that, you don't want to be looking at a BTC AUD chart and analyzing that, because it means nothing, because you're actually also analyzing the exchange rate between AUD and USD. You want to look for your decisions, your technical analysis decisions, and your analysis. you must be looking at the BTC USD chart, because that's what it's getting traded in. That's when the buyer and the sellers go to do that. So first thing is, if you see BTC AUD charts around, they really are just a synthetic for having a look at. Don't use them for your analysis, because you're actually analyzing two things in one chart. Right, and so that means that there's going to be this mismatch between the accounts that you have at your exchanges being in AU dollars, and from what I can see is that all of them in Australia will only take AU dollars, not US dollars. If you deposit US dollars, I think your account will still be in AUD. Now, I don't know all the answers for all the exchanges and all the brokers, because it's still an embryonic space, and it's still working itself out. And so what I'm going to suggest in a moment is, I'll get to that in a moment. So just be aware at this stage of these nuances. Now, you may be able to, and you need to find this out yourself, convert your AUD into USD, through Ozforex or OFX or some other, exchange the currency exchange that charges very low fees. And then once your money's in US dollars in the entity in which you're going to trade, because it has to be the same name as the account that you're going to set up, you may then be able to transfer US dollars into, say, Independent Reserve or Coinbase. And some may allow it and some may not allow it, which means that the dollars, when they hit your crypto exchange platform, are in USD, and you do all of your trading in USD. Now, that needs to be investigated exchange by exchange. I'm not sure what Kraken do or others, but they will come out as we all mature in this environment. And the nuances, they're not all the same. They actually are different. So just be aware of that when you, in the preparation, and you should go and do this investigation now before crypto comes out. So the other thing is, questions I've been getting is, can we get by with just an ASX data feed and beyond charts, or do we need USA? So if you only have an ASX data feed, you will get the data for the coins, and because they are part of the Forex download that comes from Norgate Premium Data, and so you will get those, and you'll also get CRYP, which is the ETF in Australia, but you won't get any of the US based ETFs, because you'll need US data for that. If you just get US data, you will still get the coins, the data feed in the coins in US dollars, because they're part of the foreign exchange feed, which is all part of the Sharewell Systems data feed we get. So that you'll get the Forex, you'll get the coins, and you'll get all the USA ETFs as well. So predominantly, and then the other thing is that if you then using Portfolio Manager, the coins are priced in US dollars. So what I'm leading to here, it's going to be easier and better for matching up with Beyond Charts, for seeing the prices, either whether you see them in Beyond Charts or elsewhere, and also to get access to the US ETFs to get a USA data feed. And I think you'll get the most out of that SPA3 Crypto with the USA data feed. Right, the other thing in preparation, sorry, let's just go back. There's a question here, let me handle it. Don is asking, do you have any simulated crypto portfolios using a universe of only ETFs and companies and not actual coins? Don, yes, we have done that, and we are going to make that part of the release documentation. We're going to do quite a lot of, in fact, the documentation is going to be mainly that, some explanation behind the signals like we do for others, and the analysis behind it, and also we'll run a whole bunch of simulations, and we'll make that part of the documentation. We're not going to do that until we've finished the. We've done that already. We've also done that in software external to Beyond Charts, so we can test Beyond Charts to make sure it's correct in this whole environment. And we'll make that when we're sure there's no bugs and nothing in it. We'll go and run those simulations, and we've already run them with, as I said to you in the last presentation, for 1, 2, 3, 4, 5, 6, 7, 8, 9 stocks or ETFs, or even crypto. 9 out of 9, 7 out of 9, 3 out of 9, etc. Positions in a portfolio. We've already run all those, and I've got in my head what I'm going to be doing in the public portfolio is probably going to be 3 out of the 9. I won't be doing CRYP in Australia. I'll just be focusing on US. So we'll have those, and we'll also have ETF only. We already have had discussions here in the office, the team, about it, and there are. There are some people who are just going to trade the ETFs and not the coins. for a whole bunch of different reasons, and that's fine. So that flexibility will be there. And I think as time goes by, if we go, we'll talk about it in a moment. Okay, so I'll talk about future directions. So hopefully that answers your question. But the early signs are that that's been fine to do that. There's quite a bit of volatility in GBTC, because it follows an ETHE. It's ETHE now is almost like bang on bang Ethereum. It's just amazing. In fact, I can show you that. It's that black line on there that you see is the actual Ethereum. So it's a relative strength. Sorry, it's a base 100 of Ethereum, and you can see that it's spot on. Okay, it wasn't always like that though. So it took them a while to work it out. So you can see over here, it wasn't like that. It wasn't spot on spot. So it's actually become, ETHE has become, a 100% tracker, if you like an index ETF. This is an Ethereum ETF. So it's pretty damn close. So you can trade, instead of trading Ethereum, it looks like there's sufficient evidence there now to say that you can trade ETHE and just about be trading Ethereum. Yeah, same volatility, everything. Okay, so let's keep going. So we are going to set up a forum. In fact, it's already been set up, and we're going to make this forum. We'd like it to be, a learning environment for everybody coming across all these nuances of AUD versus USD, who accepts, who doesn't, what the fees are to exchange AUD to USD, what the fees are to trade of these crypto exchanges. And if we can all learn that together, let's go to the forum, and we could, because I can't know everything about all the exchanges and all what the brokers are doing about making coins available as they grow, because I have no doubt that in time you're going to find stock standard brokers, like Interactive Brokers, Saxo, CMC, and you might even find some of the other fuddy-duddy ones might start making, putting these coins on their platforms just because it's the demand for it comes. With the legitimization of what the SEC did in the United States at the beginning of last year, this whole space is probably only just taking off. It's just in its embryonic phases. And what we are looking for, from a mechanical system perspective, is we're looking for sufficient data that's liquid enough to say this is researchable. It's valid and it's researchable. It has been a big enough and liquid enough market to say that was a valid market from that date onwards. And we do need, really making it a minimum 4 or 5 years of that kind of data minimum to be able to say the statistics that we get out of researching this are statistically significant enough to say, okay, I can trust that as an edge. So we're looking for that. And I think 3, 4, 5 years time, there's going to be a whole bunch of ETFs. They all working out the space. And you're going to find that cryptos, coins, and that even tokens are going to be going into mutual funds. And now they're even talking about 401ks and IRAs in the United States being able to do it. And we certainly can do it in super funds here. So let's go to the forum. And as this whole space matures from an execution perspective, we can share each other's experiences as we go through it. So forums getting set up. Future directions, I think I've just answered that. Is that we're going to watch the space, and we want to bring on more coins. There's ones like Solana is probably the most obvious next one, and there's others there as well. Probably 3 or 4 others have identified, and we are putting pressure on our. We've been discussing with our data provider for us to add those to our data feed, and as soon as we do, within days or a couple of weeks or so, 2 or 3 weeks, we'll be able to research one by one and add them to the universe. We set up our tools now to be able to do that, so we'll be able to turn around pretty quickly, adding those to the universe and grow this universe, so we can have more volatile price action to trade. Okay, just any questions on any of that preparation? It is a bit finicky. It is a bit different. We've all been stock traders and ETF traders for many, many years now, and this environment is a bit different. Another question that's come up, which I just thought of now that I didn't make a bullet point for, is should I be setting up a wallet? Should I be setting up a secret code, a secret phrase, and setting up a wallet and trade through that wallet? And that's something that you're going to have to research, but that's typically people who have large amounts that they buy and hold that they don't trade from day to day on, but you can still trade through that as well. And so whether you set up a wallet or not, or whether you just treat the crypto exchange like a broker and effectively just hold it outside of a wallet that doesn't have a secret code on it, the secret phrase. The other thing that just sprung to mind that you're going to come across with that, no, I've just slipped my mind. So those sorts of things are what we can just the other thing that you're going to come across as well is that there is a dollar for dollar coin called USDT, which is effectively US dollars, but in a crypto that you can exchange via. So you can actually go from AUD to USDT to USD or you can even go from USDT to Bitcoin, for instance. So there are those avenues that are open. So it's not just a AUD to USD. There are these sorts of nuances that are available to go through as well, and we can learn about this as we go and see and talk about which is the best way. And I'm sure not all the exchanges will do it all exactly the same way either. So we need to learn how we do that with respect to breakdown, as Don said, between crypto coins and tokens as they come on board, and also ETFs, and which ones are the best to access, and what protections you have around those as well, from a government perspective and a cash perspective. Right, pricing, just to finish up. Just a reminder that as a subscribed member, if you're already subscribed as a member, there's no urgency for you to go and buy crypto, today. The price will always be $660 for anybody who's a customer as at the 29th of August or before the 1st of September. Weekend, happy for you to have the weekend. For those of you that are watching that are not members at the moment, but currently unsubscribed members, and this is what I published a couple of weeks ago, you have to reactivate, and let's say, I can say it today, let's say by Sunday the 31st of August, or before Monday, opening a business at 9 o'clock. If you're unsubscribed at the moment, you're taking a break or whatever, and you want to get an advantage of $660, then reactivate and get going with SPA3 Crypto leading into September and beyond. And so the price is going to go up from the 1st of September to $13.20 for all unsubscribed members as at the 31st of August, or opening of business on the 1st of September. For those of you that want to order and that haven't already, you can go to SPA3Crypto.com and online store, and you can do it there and get ready for the release week after next. So are there any more questions? I think I tried to make today, I did say update, but it's more about preparation, because there's quite a bit of preparation to do. And as you know, paperwork with brokers always takes longer than what you anticipate. So you have to think about the entity through which you want to execute SPA3 Crypto, your own name, and through a super fund, through a trust, through a PDY Limited, probably the four main options, and then get set up, ready for it to come. And public portfolio will probably start the week after, around about that week of the 15th. We'll get going on the public portfolio, and we can see how all this goes together. And a reminder, like we do with the LTTP, we say start small while we learn. There's risks always in the environment, let alone the execution environment, let alone the geopolitical and trading environment. There's risks everywhere. So we want to learn, make those mistakes as we go through learning this space and this environment with a small amount of money. So just toes in the water first, and we can do all that from that week of the 15th with the public portfolio. So looking forward to taking you all on this journey. And I've been basically a buy and holder for 4.5 years with just minor trades here and there. And I haven't gone and traded. Why? Because I didn't have a system. Now I have a system. And so we'll go on this journey together. Look forward to it. It'll be exciting. There's no other questions. Ralph saying ADA, please. I don't know what ADA means, Ralph. So Robert's saying, why wouldn't we start the LRT crypto when you commence trading rather than 6th of October? Oh, the LTTP. So the LTTP, is there's going to be, and it's something that just come to mind, is that in the 6th of October, there will be the LTTP that starts then. You'll be able to choose to do crypto then if you wanted to do it then as well. So I'm not going to wait until the 6th of October because there's going to be LTTP crypto portfolio starting up every 2 months for years to come. So I'll start the public one, as soon as we're ready to go. So that's the way we'll do it. And then the LTTP cryptos they'll run every couple of months whenever there's an LTTP. So people will be able to choose between investor or crypto for that 6th of October Learn to Trade Properly study group that starts the next one, the 6th of October. Okay, so Cardano. So Ralph's saying, what about Cardano? That's on the list. That's one of them. Cardano is one of them. Solana is another. And there were 5 others that I'm looking for historical data for to come into our data feed that has sufficient liquidity, sufficient longevity of data that we will be able to add almost immediately once we have the data and do the research. So I'm asking for those as well to come in. Okay, Merrick is saying, will there be a change in the yearly invoice to include the crypto charts? Not at this stage. So all of this data, all of the ETFs will always be in the data feed, in the USA data feed. At the moment, the coins are in the main coins, the ones that we're going to provide, are in the foreign exchange, the forex spot data feed that Norgate provides us. So if there's anybody listening out today that only uses Beyond Charts, the way that the data goes into Beyond Charts is that there's separate data fees for foreign exchange, for options, for commodities, and for equity. So there are 4 different breakups, and that's a Norgate thing that we went along with. But in our Sharewell Systems feed, all of that is in one feed, so they're not separated. So while you're getting a Sharewell Systems feed, at the moment the coins are coming through the Forex feed. I don't know, and I haven't got any insight whatsoever. I'm just got an open mind and been on the planet long enough to know that things change. I don't know what Norgate are doing regarding separating crypto from foreign exchange. There's a limited number of currencies on the planet just because there's a limited number of countries on the planet. But there would be an unlimited number of, there could be thousands of crypto tokens in the future. So I don't know what they're doing with respect to how they set up their data feeds. But at the moment, the coins come as part of the Sharewell Systems feed. So the answer to that is that it's included in the yearly invoice. There's no additional fees to pay to get the crypto coin data at this stage. And I'm just leaving it open. I don't want to give a categoric no because I know things change. But we'll see what happens with our data provider going down the track. Okay, Don's also said, I've noted on my accountant's recent annual price list for the SMSF that they intend charging more for portfolios with crypto in them. Okay, well, my accountant has had that in my super fund for the last 4 years, and they'll be doing the 2025 one, and they haven't indicated there's any additional charge for doing crypto at this stage. So that's something to watch. I'm sure everybody's going to try and and see if if it takes more time to do all the reconciliation and to do all the auditing that has to go along with this for a self-managed super fund, then maybe that's the case. They will charge more. Yeah. So keep an eye out for that. Thanks, Merrick. And that's something that we can discuss on the forum as well as we go. As to I remember doing this 25 years ago when online brokers were all starting out, and we were in the first few years of the business. And there were, there were all these sorts of things happening with accountants saying, no, don't trade, or they charged extra for trading, or they didn't know how to reconcile, lots of trading, lots of online trading. So, and that's all now, all the accountants know that. I suspect there's going to be something similar happen with crypto as well as this whole space grows and matures. Okay, thanks for those comments and questions. We're getting ready for this. It'll be exciting. I'm certainly looking forward to it. I hope you all are. And remember, it's a satellite strategy. That's what it is. It's a satellite strategy. We want to get better returns so we can tip them into the bucket of the longer term, more passive core part of our investments. But let's have a little bit of fun. You don't need to take too much risk. Let's learn, let's get challenged, and let's have a bit of fun and make a bit of money as well out of this exciting environment. Okay, we'll finish up there. Bang on the hour. Covered 2 big topics today. Thank you for your time, and we will we'll let you know when we do. We'll obviously keep you up to date with the release and what to do. Effectively, it's just download, open, and close Beyond Charts twice, and because that's probably going to happen before the next time I do another webinar, and we'll keep you up to date with what's happening in that environment and the upgrades. Okay, no more questions. Thank you for your time. We'll see you probably in a couple of weeks' time, and then obviously the crypto training sessions that we do in due course. Until then, I wish you consistent and objective and peaceful active investing and trading.